and families.
Hello, everyone. Thank you so much for joining us for CBN News Watch. I'm George Thomas. We begin with the latest.
Here at St. John's Festival March. There are certainly a lot of...
Now, if you're anything like me, you're probably a little bit fatigued with all of the negative sentiment and a lot of the negative news headlines we are seeing all across the world at the moment. I think the only thing the market is perhaps not already pricing in is some kind of zombie apocalypse. What I'm getting to is there are a lot of headwinds for stocks at the moment. Really, I'm being asked mostly at the moment is whether or not stocks will continue to crash, or is there some kind of light at the end of the tunnel. Now, I understand for most of you watching, you will not follow the markets as closely as us professionals do, but I do have a lot of charts that I want to get through this week. And if you do get some value from my work, please feel free to like and subscribe on YouTube, or feel free to follow me on Twitter, and feel free to, of course, share my work. As most of you know, I do not use the magical hindsight indicator. I timestamp all of my work, which is very, very important with the field in which I work. A few of my recent timestamped calls have been the market crash at the start of the year, the bottom of the bear market rally that we've seen in June. I've called the top just a few weeks ago of the recent bear market rally, and I'm potentially making another call on another bear market rally now, but I do have some charts that I think I want to present, and you can make up your own minds. You can go all the way back to the crash of 2020 as well. Again, more time-stamped work. Now, please pause the video, make sure you are comfortable with that. Very, very important disclaimer. It just basically says, don't be silly, do all your own due diligence. And to give myself a little bit of credibility, I'm working my way towards my CMT, and analysis, market analysis is something that I'm very widely known for in the professional game. So enough about me, let's dive into some charts, let's see what the market's telling us. Now, I got a lot of questions and a lot of emails after my analysis video that I put out last week, and also my free weekly letter that went out on the 1st of September, which basically just says that what if we're now just putting in a higher low, and what if we are approaching a level in the market where we can reasonably expect some kind of rebound. Now, that looks to have played out perfectly. Now, whether or not you use things like Fibonacci tools, etc., it's not really that relevant, I guess. You could just use basic support and resistance levels, but I like to use Fibonacci levels where I can demonstrate on the chart that they matter. As we can see with the S&P and with triple Qs, we have pulled back to the 61% retracement levels of this entire move higher. We've had a big rebound in the last few days. I hope everybody has done very, very well. I know the analysis that I put out last week looks to have played out. So I'm really looking at this through the lens of, let's see how far this wants to go. If anything, the 2020 market crash taught me is to not second guess what comes next with the market. I think you just have to identify these risk to reward propositions and just stay on the trend for as long as the trend is essentially there. Now, that goes against, if you have a look and see what Michael Burry has been doing again, he's sold off all his positions again, and I get it. Michael Burry is a big deal in the world of finance. Essentially what Michael Burry is looking at, and I've communicated this chart quite a few times now over the last 6 months, is Michael Burry is looking at the S&P 500, and it's entirely reasonable. What he's basically saying is that with each crash, the crash that we're currently experiencing undercuts the previous crash, and hopefully this is quite a good visual just to see what he's seeing. And essentially what he's looking at is a very steep decline in the S&P 500. Now, for me, I'm looking at it what if this is a potential market bottom? On an individual stock level, I see signs that a lot of stocks have already bottomed. I'm sure many of you watching are seeing the same thing. We're seeing at the moment with seasonality that yes, over the course of the last week, the market has rallied very, very hard. It's been great. I hope everybody has done very, very well. But something to bear in mind with September seasonality is it's actually towards the end of the month that we tend to get the headaches. So yes, we have had the yield curve. It has inverted. We know that is a precursor to a recession. So that is absolutely something that I need to be very, very mindful of. We already know that the US dollar has been a massive headwind for stocks. Now, it has been the safe haven asset for the whole market crash that we've experienced. The US dollar has been ripping, and I hope everybody has done very, very well from it. It has literally been one of the easiest trades of my life, just to hold the US dollar. But something to obviously bear in mind is if you are like me and you are in the UK and you have converted your accounts over to the US dollar, we are now approaching levels where it makes sense to keep a very, very close eye on things. The negative correlation with the S&P 500 is of course there. The US dollar index has been ripping higher whilst the S&P 500 has come under a lot of pressure. So really the question is what happens with the US dollar? I know there's many of you that will like to watch a lot of the economic indicators, etc. But for me, the US dollar really tells me everything that I need to know in terms of the market direction. Now, we of course have had the European Central Bank put in a 75 basis point hike this week. So we obviously will need to consider what the Fed will do at their next meeting later on this month, and I suspect there's going to be a fair bit of volatility that accompanies that. But for me, I'm just simply looking at the individual charts. This is the S&P 500, logical turning points for RSI, Fibonacci levels, 200-day simple moving averages, etc. These levels are looking like they matter a lot. For me, it's a very technical chart. Again, very, very similar with the triple Qs. We've got the Dow Jones Industrial Average as well, putting in what looks to be another higher low, and again exactly the same with the Russell 2000, which again higher low, pulling back to Fibonacci levels. So really that's information that I want to really be paying attention to. I think for a lot of you, many of you are looking for information. Well, what does that mean for a lot of the big tech names? Well, as always, I have around 20 individual names that I think are worth considering, assessing the charts, doing some due diligence on. But with something like Nvidia, now I covered Nvidia last week, just saying that it's reasonable to expect some kind of oversold bounce. Now, again, hindsight tells us that looks to have played out. Support levels at $135. So really, for semiconductors, I guess as a sector, to invest in Nvidia is a massive component of it. Great company. It has been taken down post earnings. It is chopping about sideways at the moment. But if we are going to get some kind of mean reversion, this is probably a level where you would maybe want to pay attention. We've got Google. Now, I said last week that I was hoping to get an opportunity to buy it around this 100, 102 area. It doesn't look like it's going to go that far. It looks like this support level here around 106, 107 is holding up. It is in a sideways range at the moment, but of course, if you like great companies, great tech companies, safe as houses, Google, I think, makes a lot of sense at these levels, provided the market, of course, doesn't fall off a cliff. I think with every chart that I would like to communicate this week, there has to be a level on any chart, any stock where your thesis is starting to come into question. I think with stocks like Nvidia, with Google, Netflix, etc., they're all great companies. Especially with Google, I think dollar cost averaging on Google is absolutely fine. But I think Netflix, I like it above 250. I did start to cover this one on a breakout at 200. I did put out an alert to our clients and members at 230. It reached as high as 250, but I think we're looking at a potential cup and handle pattern here. But the pattern needs to confirm itself on a move above 250. For those of you that like to front run patterns, etc., of course, you need to understand that if we start to break below previous lows, then again the thesis maybe starts to come into question a little bit. Now, earlier this week, I was actually expecting Microsoft to break down. I posted the monthly chart to Twitter, and really, I think I should probably know better than posting monthly charts halfway through the month. But switching it up to the weekly chart, the weekly chart is still holding firm at the moment. We're looking at Amazon. Again, I've had a lot of questions on Amazon because I made a big bottom call here at 100. I called the top again, just purely based on Fibonacci levels, support and resistance levels. And again, I think it's probably starting to look like it wants to go and test the 140 level again. But if we start to break below previous lows again, the thesis maybe starts to come into question. Apple, again, I'm fully expecting it to go back to test the levels at 182. I think that certainly makes a lot of sense. And Meta, again, lots of questions on companies like Meta, because of course we know that previously Facebook, etc., great company, lots of ad revenue, etc. For me, the company has changed a lot. They spend a lot of money on developing their metaverse platform, etc. It seems to be a bit of a money pit. But that said, assessing purely the chart, I think there's a massive bullish divergence. There's very, very easy out on the chart. If it starts to break below these levels, I think it's probably a short. But I think at the moment, I think there's probably a risk to reward proposition being offered on something like Meta. And again, signs there that some stocks are trying to put in a bottom. Now, I do get asked a lot about gold. I think with something like gold, it's really a defensive area of the market. But for me, it's an area of the market that's not terribly appealing. A couple of months ago, I put out a chart just highlighting a good risk to reward proposition at the height of the market volatility, the declines, etc. It did start to get moving, but the more times the level is tested, the more likely it is to break. It doesn't really fill me with a lot of confidence that we get this mini rally and then a retest of the support levels. So for me, the areas of the market that are more appealing are really not in the gold realm. But that said, gold miners, generally speaking, you can get a lot of alpha from the gold miners. Potential failed breakdown there. So that might be certainly something to consider. Now, I also get asked a lot about China. Now, with Chinese names, I don't know if anybody watching really truly trusts the data that comes out of China. But if we look at something like emerging markets, which is really 40% China, we can see from the chart that for me it's a pretty obvious simple moving average chart. We can see the 100-day simple moving average has been a big problem for the chart. Now, this was actually a short in our members sector ETF chart book, and it's met the downside objective. But when we reach these support levels, they do quite often offer risk to reward propositions. But for me, emerging markets really get a lot more interesting if we can break out above that 100-day simple moving average. The Hang Seng, for example, is again pulling back to levels where we will either get a massive rebound or a complete collapse. So I would be very, very mindful and on guard, I guess, in investing in the Chinese names at the moment. Now, I actually covered the Chinese internet names quite a few months ago, just highlighting that they had capitulated, which is a sign of a bottom. Now, I think for me, there's a pretty big level here with KWEB, and we're at the lower end of a range, which again offers risk to reward proposition. But for me, I think KWEB probably gets a lot more exciting if it can break above its 200-day simple moving average, and if it can get above the levels there at around $34. Now, some individual names that are showing a lot of relative strength and potentially looking to break out. We have the American Electric Power Company. Utilities name, I know it's not the most exciting area of the market, I get it, but I don't discriminate against charts that are going up. ConocoPhillips is doing incredibly well. Now, for disclosure, this has been a recommendation to our clients and members on a breakout above $100 here, and it's doing very, very well at the moment. Micron Technology, I do like it above $67. Obviously in the semiconductor space, which has been hit quite badly over the last few months, I think if Micron Technology can put in some kind of base bottom here, I think above $67 makes a lot of sense. Now, I've asked about Chipotle this week. Now, Chipotle is close to meeting our upside objectives. Obviously, massive sideways range. I like charts that are range bound because you can buy at the bottom, you can sell at the top, and there's a very, very easy out. For me, those are the types of charts in the current environment that make most sense. CrowdStrike, again, very, very close to hitting upside objectives here just in a few days. We've got Roblox. Again, upside objective here around $54, $55. Shopify, again, doing very, very well at the moment. I think there's a case to be made there that is heading back to that $41, $42 level. And we've got Plug Power. Now, what I would say as well is if you are still here, please do hit the like button. It tells me that you're getting some value from my work. Plug Power, I think, of course, we are looking at a lot of the clean energy names at the moment. There is starting to be a lot of relative strength shown in the clean energy names. We're not just talking about Plug Power, we're talking about some of the solar names. For example, the TAN ETF is looking quite interesting at the moment. So I think those are all names and areas of the market that you could potentially look to exploit. But as always, it really just comes down to the broader market. What comes next with the broader market? Are we going to fade this rally in the next week? Who knows? But I think there is opportunity if you know where to look, and you can take advantage of these range-bound names. Buy at the bottom, sell at the top, because it is something that I communicated in our weekly letter on the 1st of September. My best guess is we chop sideways, which for me means risk defined, buy low, sell high. So these are the types of charts that I've been trying to find and communicate to our clients and members over the last week, and a lot of them have played out beautifully well. So we will see how the market reacts next week. But if you are still here and you are wondering who I am, and maybe you've stumbled across me on YouTube somewhere, feel free to jump on to our website. There's a link in the description for honeystocks.com. We provide memberships to our clients and members. Every single week we provide our premium work to our clients and members. Every single Wednesday, again, we provide our halftime report, which is a bite-sized video analysis of charts to consider and updated market conditions. Provide access to all of our high conviction investment ideas, which I will show you what that looks like in a second. Provide access to a wonderful community of investors, traders, professionals all over the world. I provide full access to our chart book, which is updated every week with all of our sector ETFs, commodities and stocks. And we also provide access to our complete technical analysis program if you are in the market for learning more about technical analysis. I'm told that my program and my tutorials are worth the membership fee alone, but we include it free with all memberships. And again, time-stamped work is all on our website, so feel free to go and check that out. But just to show you what our high conviction ideas look like, this is the idea that went out for ConocoPhillips, massive winner. Got Netflix, again, I think I touched on that one as well. Steel Index was a good little winner. We also have short ideas as well when the market conditions present themselves. Again, massive winner for the commodity index. Zillow, good winner. Box, massive winner. But I'm very, very unique in what I do, because every single high conviction idea that has ever gone out to our members and clients is logged on our website for complete transparency. You can see the dates that the ideas have gone out. You can see the types of stocks that we're recommending. Now, of course, with it being 2022, over the last 6 months, the number of high conviction ideas has been a lot less than previous years. That's just a function of the market. Nothing that we can do about that. But you can go and check to see exactly what we've done over the last 4 or 5 years. It's all logged for complete transparency. So I think if you are someone that has a mid-term approach, if you're looking to get away from day trading because the penny's dropped and you've realised that it's just not that consistent, if you are maybe too busy with work, family, business, maybe you just want to be part of a successful community and you're sick of hunting around social media all the time, we might have a home for you. But feel free to go and check out our website. Don't forget to hit the like button. And if you're still here, thank you very much for watching, and hopefully can welcome you soon. Thanks as always.